Welcome to Daily Newscast. This is episode 14, and we're recording on September 19th, 2025.
Hello, and this is where we take that deep dive into the big stories shaping our world. We aim to give you the context, the knowledge you need to really understand what's going on.
Exactly. And we put this together especially for you, our intermediate and advanced English learners. We try to use vocabulary that's current but accessible.
Right, and the conversation, well, it's natural, but we keep the pace just a little bit slower than you might hear out on the street. It's designed to help you follow along.
So, listen while you're cooking, maybe out for a walk, or even just tuning in while you work. It should fit right in.
And if things feel a bit dense, or maybe a little too fast still, remember you can always adjust the playback speed on your player. Maybe try 0.75x speed.
Okay, so today we've got 5 really interesting stories. They take us from, well, the hidden corners of the internet right through to high finance, sports controversies, and even the art world.
It's quite a mix. We'll be looking at cybersecurity first. Some very young hackers have been charged in connection with that big group, Scattered Spider.
Then we'll jump into finance. The United States Federal Reserve just cut interest rates, and we're looking at how markets around the world reacted to that.
After that, sports. There's a major cycling event happening in Rwanda, the first time in Africa, but it's surrounded by some serious controversy.
We've also got technology and legal tech. It sounds niche, but artificial intelligence is completely transforming how legal teams handle data, and it's becoming a massive market.
And finally, art and culture. This is a fascinating contrast. A lost Picasso portrait has just turned up, while at the same time, musicians are boycotting Spotify over ethical concerns.
That is quite the lineup. Let's kick things off with the story that maybe feels the most immediate in terms of, everyday vulnerability, that huge cyber attack on London's transport system.
Right. So the big news is that authorities in both the United Kingdom and the United States have filed charges against 2 young men from the UK. Salah Jaber, who's 19, and Owen Flowers, who's only 18.
And the UK charges specifically relate to that attack on transport for London, TfL, right? That massive disruption that started way back in August 2024.
Exactly. And we need to be clear, this wasn't just, a quick hack and grab of data. This was a really serious long-term disruption.
How long are we talking?
3 full months. For 3 months, TfL's digital systems were basically crippled, and the cost. The estimate is around 39 million.
39 million pounds, that's huge. And what did crippled actually mean for people using the system? Did the trains stop running?
Thankfully, no. The actual physical transport, the trains, the buses, they kept operating. But everything else, the sort of digital layer on top, that was hit hard.
Like what specifically?
Well, things like the online customer support systems, a lot of the automatic ticketing machines, even the information boards you see on platforms. If they relied on network data, they were knocked offline.
Wow. Okay, so major inconvenience, massive cost. What about the internal disruption?
This part really shows you the scale. TfL has about 30,000 employees, right? They had to make every single one attend an in-person session to reset their passwords with identity verification.
In person, not just an email link.
Nope, in person. Think about the logistics of that. Coordinating 30,000 people, it just grinds everything to a halt. That's often the real goal for these attackers, causing chaos, forcing massive spending, stopping work.
And was customer data actually stolen?
Yes, unfortunately.
Yeah.
TfL confirmed about 5,000 customers were affected. And the data was pretty sensitive. We're talking bank account numbers, sort codes, which you often use for refunds, like with Oyster cards, plus names, email addresses, even home addresses.
That feels very personal. It's not just corporate data, it's individual security at risk.
Absolutely. And this attack isn't just a local UK issue. These 2 teenagers are allegedly linked to a much bigger international cybercrime network. You might have heard the name. Scattered Spider.
Scattered Spider, right? They've been in the news quite a bit. What makes them different?
Well, they're known for a couple of things. One is just the sheer scope of their attacks. They go after big corporations globally. But the other thing, and this is really interesting, is their method. They're masters of what's called social engineering.
Social engineering. That's more about tricking people than, like, complex coding, isn't it?
Exactly. They're very good at manipulation. They use tactics like SIM swapping, basically tricking a phone company into moving your phone number to a phone they control.
Ah, so they can intercept security codes sent by text message?
Precisely. That bypasses a lot of 2-factor authentication. They also use things like SMS spoofing, sending texts that look like they're from your company's IT help desk, trying to get you to click a link or give up your password. Simple, but incredibly effective.
And the charges from the United States against Joubert, the 19-year-old, They paint a picture of this global operation, don't they?
They really do. The U.S. Justice Department accuses him of being involved in at least 120 network intrusions across the world just since May 2022.
120 intrusions. For a teenager, that's staggering.
It is. And the money involved is just mind-blowing. Scattered spider victims, including dozens in the United States, have reportedly paid out at least $115 million in ransom demands.
$115 million. This is organized crime on a massive scale, just operating online.
Absolutely. And their targets show a real willingness to hit sensitive areas. Jubair, specifically, is accused of hacking into a United States-based critical infrastructure company back in October 2024.
Critical infrastructure, like power grids or water supplies.
The reports don't specify which sector, but yes, that's the kind of thing it implies, vital public services. He's also accused of intruding into the United States federal court system in January 2025.
Wow, that feels like crossing a different kind of line, targeting government systems and essential services. Why are we seeing teenagers involved in attacks at this level?
That's a really good question. I think part of it is the barrier to entry for social engineering isn't necessarily deep technical skill. It's more about confidence, maybe a lack of empathy, and the ability to convincingly lie or manipulate someone over the phone or email.
And the potential rewards are huge, with cryptocurrency making it easier to hide the money.
Exactly. Global connectivity plus anonymous digital currency. It makes the risk-reward calculation look pretty good to some young people who are tech-savvy, but maybe lack ethical boundaries.
Did the authorities manage to get any of that ransom money back?
They did seize quite a bit. Reports say about $36 million worth of cryptocurrency was seized from wallets controlled by Jubair back in July 2024. But here's a detail that shows how slippery these groups are.
Uh-oh.
While the seizure was literally happening, authorities allegedly observed him actively transferring about $8.4 million out of those wallets into brand new ones, trying to move the money even as it was being taken.
Unbelievable. It really highlights the need for international cooperation, doesn't it? Like the UK's National Crime Agency working with the FBI here.
Absolutely essential. These criminals operate across borders without a thought, so law enforcement has to coordinate globally to stand any chance of catching them and, hopefully, protecting vital services like London's transport system.
Okay, so that image of London's transport system grinding to a halt digitally, it's a stark reminder of vulnerabilities. Let's shift focus now, though, from digital risk to financial risk and the big moves in the global markets. The United States Federal Reserve cut interest rates this week for the first time this year.
That's right. The Fed made the announcement on September 17th. They lowered the target range for what's called the federal funds rate. It had been sitting at 4.25% to 4.50% for most of 2025, and now it's lower.
And interest rate cuts are usually a signal, aren't they? A sign the central bank is worried about the economy slowing down.
Generally, yes. The main reason they gave this time was a noticeable softening in the labor market. Fed Chair Jerome Powell specifically mentioned that the risks to employment seem to be increasing.
Was there specific data backing that up?
Oh, yes. And it was pretty significant. They announced a major downward revision to previous job growth numbers. It turns out that between April 2024 and March 2025, the economy added 911,000 fewer jobs than they initially thought.
Wow. Nearly 1 million jobs vanished from the statistics. That's quite a correction. It suggests the economy wasn't as strong as they believed.
Exactly. It makes a rate cut look less like a preemptive move to keep things stable and maybe more like a reaction to realizing the situation was weaker than projected.
But what about inflation? Wasn't that the big worry, keeping rates high? Has inflation disappeared?
Not entirely. That's the balancing act. Inflation has come down from its peaks, definitely. But it's still, in the Fed's own words, somewhat elevated compared to their 2% target.
Where is it now, roughly?
The measure they focus on, core PCE inflation, that's personal consumption expenditures minus food and energy, is running at 2.9%, still almost a full percentage point above target.
Okay, 2.9%. And Powell also mentioned something about tariffs, didn't he? How trade policy is playing into this.
Yes, he did. He pointed out that prices for goods, actual physical things, are up 1.2% over the last year. Now, that might not sound huge, but it reverses a long-term trend, like 25 years, where globalization generally made goods cheaper.
And tariffs are directly adding to that inflation.
The Fed estimates that current tariffs are adding about 0.3 or 0.4 percentage points to that 2.9% core inflation figure. So a noticeable chunk.
That brings politics into monetary policy, doesn't it? The Fed's trying to manage inflation, but trade decisions made elsewhere are pushing prices up.
Precisely. And the Fed's challenge now is to figure out if this tariff effect is just a one-off adjustment, prices go up once, then stabilize, or if it's going to be a persistent source of inflation. That's much harder to deal with.
Is it realistic to think it's just a one-off? If tensions remain high and countries keep using tariffs, couldn't that become a permanent drag, always pushing inflation a bit higher?
That is the absolute crux of the debate right now among economists. If this becomes structural, if supply chains permanently shift and costs stay higher, then yes, that baseline inflation might just settle higher. And if people expect inflation to be, say, 3% instead of 2%, the Fed loses credibility and might be forced to hike rates again down the line to bring those expectations back down. It's a real risk.
Okay, so how did the markets react immediately to the cut? We often think rate cuts boost demand, but oil prices actually fell.
Yeah, that was interesting. Global oil prices dipped. It seems the market is more worried about weakening global demand right now than anything else.
Mm.
Even with things that should support prices like Ukraine hitting Russian refineries or ExxonMobil staying out of Russia, the fear of a global slowdown, especially in manufacturing in Europe and maybe Asia, is overriding those supply issues.
So demand fears Trump supply constraints, for now at least.
Seems that way. Analysts are basically saying there's a limit to how high oil can go if the underlying economic trends look weak, although not everyone agrees. Kuwait's oil minister came out quite optimistic, actually. He predicted that the rate cut would boost demand, particularly from Asian economies, as borrowing gets cheaper globally. So, bit of a counter-narrative there.
Okay, but what about the stock market? That usually likes rate cuts, right?
Yeah.
Especially tech stocks.
Absolutely. And that's exactly what we saw. Rate cuts generally help growth sectors like technology. The logic is pretty simple. Lower interest rates make future profits look more valuable in today's money. Tech companies promise big future growth, so they benefit disproportionately.
And we're seeing companies themselves acting confidently with all these stock buybacks.
Yes, massively. Stock buybacks in the United States where companies buy their own shares back from the market have apparently surpassed $1 trillion already in 2025. That's a record pace.
$1 trillion. Who's leading that charge?
It's heavily dominated by the big tech names. Apple announced a $100 billion buyback program. Alphabet, Google's parent, committed $70 billion. Nvidia, $60 billion, which is their biggest ever. Plus, major banks like JP Chase and Goldman Sachs are doing huge buybacks too.
Is that purely a sign of confidence? Or could it also mean they're hesitant to invest that cash elsewhere, like in new factories or big R&D projects?
That's a really sharp insight. It likely signals both things at once. Confidence in their current ability to generate cash, absolutely. But maybe also some uncertainty about making big, long-term future investments.
Why the uncertainty?
Well, think about the trade situation we just discussed. If the global trade outlook is unstable, if there's a risk of new tariffs or geopolitical disruption, maybe you pause that plan to build a huge new factory overseas. Redirecting the cash to buy back stock is seen as a safer, more flexible way to return value to shareholders when the long-term strategic path looks foggy. It connects monetary policy right back to those geopolitical trade winds.
Okay, from global finance shifts, let's dive into something a bit more specific, but equally driven by massive change. The world of legal technology, specifically eDiscovery.
Right, eDiscovery. Maybe we should quickly explain that term for listeners who aren't familiar.
Good idea. So eDiscovery, that's electronic discovery. It's basically the process lawyers use in lawsuits or investigations to find, collect, and review all the relevant electronic information, like emails, text messages, documents on servers, social media posts, anything digital that could be evidence.
Exactly, and this whole area is just exploding right now. Why? Because the amount of data we're all creating globally is expanding at an insane rate. Estimates are around 30% growth every single year.
30% more data each year. That's mind-boggling. And all that data means more stuff for lawyers to potentially sift through in a case.
Precisely. Which is why the market for eDiscovery tools and services is booming. The projections are pretty startling. It was worth around $16.89 billion in 2024.
Okay, already a big number.
And it's projected to hit $25.11 billion by 2029. That's a compound annual growth rate, CAGR, of over 10% consistently since 2012.
Wow. What's driving that massive growth right now? Is it just the data volume?
The data volume is a big part of it. But the real catalyst, the sort of inflection point, is artificial intelligence. Specifically, generative AI, GAI, and large language models, or LLMs.
Ah, AI again. How deeply is AI actually embedded in the legal field for this stuff? Is it still experimental?
Not anymore. It's moving incredibly fast. Recent surveys show that over 57%, 57.114% to be exact, of legal organizations say they're already actively using or deploying these AI tools for e-discovery. Another 15-16% are running pilot projects.
So well over half are already using it day to day. How does it change the process? I always imagine teams of lawyers just reading thousands of emails, which sounds expensive.
That was the old model, and yes, incredibly expensive and time-consuming. LLMs changed the game. They can understand language and context much better than older software. You can train the AI on a small set of documents that you know are relevant.
Okay.
And then the AI can rapidly scan millions of other documents to find similar ones, identify privileged information, flag key issues. It can do in minutes or hours what might have taken a team of humans weeks or months.
That speed must be the key driver for the software side of the market then.
Absolutely. And the numbers show it. The software part of the e-discovery market is growing faster, nearly 12% CAGR than the services part, which is more like 9.5%. By 2029, software is expected to be almost 40% of the total market spend. Automation is definitely taking over the routine tasks.
What does this mean for pricing? If software is doing more, are costs coming down?
It's becoming a bit more standardized in some areas. For example, the cost of having a forensic expert physically go on-site to collect data from computers. That seems to be settling in the $250, $350 per hour range in the United States for about 70% of providers.
Okay, so some standardization there. What about remote collection?
That shows more variation in price, probably because the logistics are simpler, no travel costs, for instance.
But overall, with AI doing more of the heavy lifting, what's the future trend for legal costs in this area?
The expectation is really a split. For the basic, more mechanical stuff, just processing data, hosting it, simple filtering, you should expect prices to get squeezed. Price compression. It might become almost like a utility priced very cheaply, like cloud storage.
Okay, cheaper basics, but
But for the more sophisticated, AI-powered services, expect premium pricing.
like what kind of services?
Things that still need significant human expertise directing the AI. Advanced analytics to find hidden patterns, reviewing documents across multiple languages simultaneously, providing strategic advice on how to use the AI results to build the strongest legal case. The value is shifting from manual labor to expert guidance of the technology.
That makes sense. But you mentioned the United States pricing. We talked about global cybercrime earlier. Legal cases often cross borders. How does that work for eDiscovery?
That's the big challenge. There's a surprising, almost shocking lack of transparency around international e-discovery pricing.
Really? Even though big lawsuits often involve multiple countries?
Exactly. Investigations constantly span continents, needing compliance with different data laws like GDPR in Europe. Yet almost all the pricing data available focuses overwhelmingly on the United States market. Like over 90% of survey responses come from US-based firms.
So if you're a multinational company or a global law firm trying to budget for a case involving, say, Germany and Brazil, you're kind of flying blind.
Pretty much. You have different data privacy rules to navigate, maybe different labor costs if you need local human reviewers for certain languages, currency fluctuations. It all makes budgeting incredibly difficult. This lack of clear global pricing benchmarks makes choosing vendors for international cases really tricky, and you have to wonder who benefits from that opacity. Probably the vendors who can charge whatever the local market will bear. Okay, let's shift gears again. From the complexities of legal tech pricing, we turn to a very different kind of global event, one where sport, national image, and ethical questions collide. The 2025 UCI Road World Championships, taking place in Kigali, Rwanda.
Right. This is a huge deal for cycling, isn't it? It's scheduled for September 21st to 28th, and it's the very first time this top-tier championship has ever been held on the African continent.
It really is historic. A massive moment for African cycling and for Rwanda as the host nation. But Kigali itself, well, it's going to be an incredibly tough race location.
Why is that?
Rwanda is famously called the land of 1,000 hills. The city of Kigali sits at over 1,500 meters. That's nearly 5,000 feet above sea level. The altitude alone is a challenge.
And the hills. Oh.
Yes. The organizers have confirmed that the route for the men's road race will feature the most elevation gain in recent World Championship history. It's definitely a course designed for climbers, not sprinters.
Can you give us an example of how tough, like the time trial course? That's usually flat, right?
Not this one. It's completely different. The men's time trial is just over 40 kilometers long, but it packs in 681 meters of climbing. That's a lot for a time trial.
Wow. Any specific climbs?
Yes, the big one is the Koteki Nyihura. It's a cobbled climb, So bumpy and hard to ride, about 1.3 kilometers long, averaging almost 6% gradient, but it kicks up to over 10% near the top. That kind of climb in a race against the clock totally changes who might win.
It sounds brutal. And it sets up quite a battle, doesn't it? Especially in that men's time trial.
Absolutely. Everyone's watching the showdown between the current two-time world champion Remco Evenepoel, who's a powerhouse, and Tadej Pogacar. Pogacar is arguably the best climber in the world right now. On a course this hilly, he poses a massive threat to Evenepoel's title. It should be fantastic viewing.
So the sporting side looks thrilling, but there's this other layer to the story, these allegations of sports washing.
Yes, that term has really dominated the conversation around the event.
Maybe let's just quickly define sports washing again.
Sure, it's essentially when a country, often one with a questionable human rights record or facing international criticism, uses hosting major sporting events to try and boost its global reputation, sort of polishing its image through the positive association with sport.
And how does that apply to Rwanda?
Well, Rwanda's context is complex. The country's led by President Paul Kagame, who's been in power since 2000. He's widely credited, internationally too, for bringing stability and significant economic development after the horrific 1994 genocide. Rwanda is often called the African Singapore because of this progress.
But there's a but, isn't there?
Yes. Alongside the praise for development, there's strong criticism from human rights organizations. They point to consistent allegations of things like torture, people disappearing for political reasons, serious restrictions on free speech and the press. So critics see this image of a stable, modern Rwanda as potentially masking a more authoritarian reality.
And hosting the Cycling Worlds fits into that critique how? Financially.
That's a big part of it. Hosting an event like this is incredibly expensive. There's an estimated £6 million fee just for the license from the UCI, the cycling body, then probably another 10 million or more needed to actually organize everything.
Wow, so upwards of 16 million, potentially.
At least. And critics ask if that's the right priority for a country that still relies quite heavily on foreign aid for many basic public services.
It sounds similar to the debate around Rwanda's sponsorship of the Arsenal football team in England that Visit Rwanda logo on their sleeves. Is it effective marketing or money diverted from other needs?
Exactly the same debate. Is it a smart investment in tourism and national branding, or an expensive PR exercise that glosses over deeper issues?
How have the Rwandan organizers responded to the sports washing claims?
Officially, they're trying to keep sport and politics separate. The line from cycling officials there is basically, sport is sport and politics is politics. They emphasize that Rwanda is safe, welcomes international visitors, and has good relationships globally.
But can you really separate them when hosting a global event is such a powerful political statement in itself?
That's the counter-argument, isn't it? The very act of hosting, the images broadcast worldwide, the positive media coverage, that is political. It inherently serves the government's goal of shaping the international narrative about Rwanda. The official neutrality might be a way to deflect direct criticism while still getting the PR benefits.
Are they highlighting any positive legacies from the event beyond just the image?
Yes, they are. And this is important. They've emphasized that hosting the championships has helped lead to the opening of a second official UCI training center in Africa. There was already one in South Africa, now there'll be one in Rwanda.
And what will that center do?
It's designed specifically to develop African talent, not just cyclists, but also mechanics, coaches, team staff. It aims to create a long-term, sustainable pathway for cycling development across the continent.
Okay, so that's a tangible benefit, building human capital, not just temporary infrastructure.
Right, and that kind of legacy investment is often the strongest defense against sports washing accusations. It shows a commitment beyond just the week of the event. The challenge for anyone watching is to weigh that genuine sports development against the undeniable political and reputational goals of the host government.
All right, for our final segment today, we're looking at art and culture from two very different angles. First, a very modern clash involving music, ethics, and big tech investments.
That's right. There's been a growing unease among some musicians about Spotify, but it really gained momentum this week. The hugely influential group Massive Attack announced they're pulling all their music off Spotify worldwide.
Massive Attack. Wow, they're big. Are others joining them?
Yes, they're following acts like King Gizzard and the Lizard Wizard who made a similar move. It seems to be gathering steam.
And what's the reason? Is it about how much artists get paid? That's usually the issue with streaming platforms.
Not this time, actually. It's specifically about the personal investments of Spotify's CEO, Daniel Ek.
His personal investments. What's he invested in that's causing the problem?
He's made a very significant investment in a European company called Helsing. It's a defense technology company that focuses on artificial intelligence, particularly for things like drones.
AI drones. Okay, I can see why that might be controversial. How involved is Eek?
Very involved.
Mm-hmm.
His private investment firm, Prima Materia, led a major funding round for Helsing's 600 million euros, which now values Helsing at around $12 billion. And Eek himself is actually the chairman of Helsing's board.
So he's not just a passive investor. He's actively leading the company. What's his justification for investing in military tech?
He's been quite open about it. He talks about the need for Europe to have its own advanced technology for defense and security technological sovereignty, he calls it. He sees Helsing as crucial for ensuring European readiness using AI.
Okay, so he frames it as supporting European security. But for artists like Massive Attack, who often have strong anti-war or humanitarian stances.
Exactly. For them, the idea that the platform hosting their music and generating revenue for its CEO is directly linked to funding and developing AI for military use. That's a fundamental ethical conflict. They don't want their creative work, indirectly or not, supporting the war machine, as some might put it.
It really shows how tangled tech, finance, and ethics can get, doesn't it? The CEO's side hustle creates a crisis for his main business.
It does. And it forces listeners and Spotify itself to confront that reality. Where does the money generated by music streaming ultimately flow? It's a tough question.
Okay, so from that very contemporary ethical battle, let's pivot completely to the art world, and a name that's always surrounded by fascination and, let's be honest, huge sums of money. Pablo Picasso. There's news about a newly discovered painting.
Yes, this is quite extraordinary. A portrait by Picasso that has literally been unseen by the public for 80 years has just been unveiled in Paris.
80 years. Wow. What's the painting?
It's an oil painting from 1943 titled Bust of a Woman with a Flowery Hat. He painted it during the German occupation of Paris, which was obviously a very difficult time.
And who is the woman in the portrait? Is it someone famous?
It is. It's Dora Maar. She was an incredible figure herself, a very talented French photographer, painter, and poet. And of course, she was Picasso's lover and one of his most significant muses during the 1930s and 40s.
Dora Maar. She's the subject of The Weeping Woman, isn't she? That incredibly famous anguished painting.
That's her. Picasso painted her many, many times, often capturing intense emotion, sometimes fragmentation and pain, reflecting their turbulent relationship and the anxieties of the era.
So does this newly unveiled 1943 portrait look like those? Is it dark and tormented?
Actually, no. That's what makes it particularly interesting. Reports suggest this painting shows her in a much more vibrant, perhaps even calmer or more decorative style. Clear lines, rich colors, the flowery hat of the title. It seems to offer a different glimpse of her, or at least of how Picasso saw her at that specific moment, even amidst the grim backdrop of the occupation.
Fascinating. And what's it expected to sell for? Picasso prices are always astronomical.
The estimate is over 8 million. That's around what, maybe 8.59 million US dollars.
Right. And what does a sale like this tell us about the art market right now? We talked about economic worries earlier with the Fed rate cut. Is the top end of the art market still strong?
It seems incredibly resilient, yes, but also very selective. While the broader art market might see ups and downs, there seems to be almost unending demand from major collectors for what the auction houses call truly fresh, iconic material.
Fresh meaning it hasn't been on the market for a long time.
Exactly. A painting like this, with the famous subject by Picasso, from a key period and unseen for 80 years, that ticks all the boxes. It creates excitement and competition among the wealthiest buyers.
So worries about recession or interest rates don't really dent demand for these absolute masterpieces.
Apparently not at the very highest level. We saw something similar last year, remember? A Picasso portrait sold for nearly $140 million. It just confirms that Picasso remains one of the ultimate blue-chip assets in the art world. His legacy, financially at least, seems utterly secure. So we've journeyed from cyberattacks disrupting a city to the Fed trying to steer the global economy, ethical debates in sports and music, and finally, the enduring power of a Picasso painting.
Yeah, quite a tour. And it strikes me that a thread running through almost all of these is the idea of narrative, isn't it? Who gets to control the story?
That's a great point. Is it Rwanda defining its image through sport? Is it the Fed shaping market expectations with its statements? Is it musicians challenging the narrative around a tech CEO's investments?
Or bringing it back to that last story, is it Picasso defining Dora Maar through his art?
Exactly. And that leads perfectly to our final thought, which comes directly from Dora Maar herself. Despite being the subject of some of the most famous, valuable, and analyzed portraits of the 20th century, she apparently had deep reservations about how she was portrayed.
What does she say?
There's a widely reported quote attributed to her. Looking back on his paintings of her, she apparently said, "All of his portraits of me are lies. They're all Picassos. Not one is Dora Maar."
Wow! They're all Picassos. Not one is Dora Maar. That's quite something. It challenges the whole idea of the portrait, doesn't
It
it?
really does. And it leaves us with a final question for you, the listener, to maybe mull over.
Okay.
In all these high-stakes arenas we've talked about today, art, politics, finance, technology, where reputations are built, fortunes are made, and power is exercised, who ultimately defines the legacy? Is it the subject themselves, the person, the country, the company, or is it the powerful interpretation offered by the person viewing them, painting them, reporting on them, or investing in them, whose version sticks?
Is it the reality or the perception shaped by power? Definitely something to think about.
Well, that brings us to the end of this deep dive. Thank you so much for joining us.
We really hope you found it useful, maybe learned some new things, or just enjoyed thinking through these stories with us.
If you did enjoy it, please do consider leaving a like or maybe a comment. And subscribing to Daily Newscast means you won't miss our future episodes.
Absolutely. Remember, we're here with a new deep dive every single day, bringing you the context behind the headlines.
So, until next time, thanks for listening.
See you tomorrow.